Good afternoon, everybody. Welcome back to our swing trading class. My name is Mike Fairborn. It's good to be back with you, folks. Plenty to look at today. We've got some of our trades to review. We've had some movement in those trades from last week. We also have plenty of additional stocks to look at today. And I really want to talk about, can we see, are there ways to see more buyers than sellers? Are there indicators that can help us with that as we look at our specific swing trades? I think it's a really interesting concept because in many cases, volume can actually lead price action. Not every time, but it can be a very interesting sort of a leading indicator. And I want to dive into that a little bit more today with you. We've talked about it in the past, but we're going to bring it kind of front and center today, along with some other indicators that we do normally discuss as well. So welcome again to all of you. Can't see the first person in the room here, but I will say hello to all of you. Jay Richardson, Andrew. We've got Do Not Copy. Okay. And we've got some others in there too, some other names. Scott, Josh, Tatiana. We've got Kevin. How's it going? Will, Mighty Mouse, Lola, Austin. Great to have you all on board, folks. Any questions, comments you have, throw those in the chat so we can try to address those for you. Cam does a great job with that. Cam's a good friend of mine, great colleague, and I appreciate Cam being here to help out in the chat as well. Excited to go through our discussion today and get the show on the road. How's it going, Chris? Good to have you on board. And let's get it going here with some disclosures real quick to get started. So information here is for general information purposes only. Now, options carry a high level of risk. They're not suitable for all investors. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. That's the ITM amount. A short put risks purchasing the underlying stock at the strike price when the market price of the stock will likely be lower. Paper money software application is for education purposes only. Investing does involve risk, including loss of principal. Past performance is no guarantee of future results, and dividends, if we do dive into dividends, oftentimes we will look at stocks that do pay dividends. It's important to note that dividends are not guaranteed. Some companies have a long history of paying dividends, but at the end of the day, they're still not guaranteed to continue. Okay, finally, we do look at futures in this class. Futures can be an interesting product. Sometimes they can lead the market, sometimes they lag the market, but they do have volume associated with them. So we do take a look at futures charts, although we do not trade futures in this class. But folks, if you are new, we do swing trading in this class. We look at that shorter term time frame really that encompasses about 3 to 14 days. At 10 to 14 days, it's around 2 weeks, roughly 2.5 weeks we look at. So you're really looking at just a few days to roughly more days. But if that's kind of the time frame that resonates with you, if you find yourself looking at trends that do tend to, kind of operate in these wave patterns that might go over sort of a shorter distance within that 3 to 14 day time frame, well, you might be in the right class because that's exactly what we talk about here. And we do focus in on what you might be seeing here. You can probably visualize here. I know many of you see this, but I do talk a lot about bull flags in this class because it does tend to represent in a lot of ways that swing trade time frame. Bull flag right up top here, short term, days to weeks. You're basically just seeing a strong initial move, kind of referred to as the pole of the flag. It's also the price range that we could be using for the target too. But this is the flag pattern itself. Let's just go ahead and highlight that flag right there so you can sort of see it. But it's a breakout of that range. And really what we try to do in this class is identify stocks for different, various reasons as to, first of all, why the trend would be up. We use indicators, of course, obviously price action, why that trend would be up in the first place or down. We could look at bear flags as well. But we look at the trend and then we tap into the price pattern itself. We looked at other price patterns besides the bull flag, but we do like to find those patterns in the direction of the trend, critical point. Okay, now down here, I want you to focus on something. We don't talk about this too often, but we're going to dive into this a little bit today. Notice, generally speaking, volume is a little bit higher. Let me grab a different color to highlight that against the blue backdrop of volume. But notice over time, volume, this is not, maybe, I don't even know, this is probably an actual example. I'm not 100% sure an example of the stock here. But clearly, notice how volume diminishes here over a certain time frame. You could say on this side, plus volume. We could also say, I'm going to get clever here, just use a red, minus. It's increasing as prices are going up. It's decreasing as it's going down. There are really kind of a couple of different ways I want to look at today as volume can lead price. And you're going to see oftentimes as we look at our examples today, how these kind of parallel, they kind of combine together oftentimes. So you might see something like a money flow indicator giving us the same indications as a plus volume and a minus volume on the consolidation. Less sellers after you have the big run up is what you might find with lower volume. That can be seen by many traders as an anticipation of a follow through of that trend, a follow through the bull flag and that rally to the upside. Now that, my friends, is a leading indicator. We can see that happening before, that is before price action moves in many cases. Okay. All right. Nothing's 100%, but it's fascinating to kind of watch and see how that does unfold at different times. Okay. Well, let's do this. I'm going to share my desktop over here, and we'll just dive on into that real quick and see what we got. Okay. There we go. So pull this up. Okay, sorry. Yeah, we got to drag it up. Sometimes when I put on my second monitor, it doesn't drag exactly as anticipated. And there's not a lot of space sometimes to grab and to pull this guy up. So sorry, folks, just 1 second. There we go. All right, that's what I was looking for. Just the drag to the upper window here will maximize that. And now we're good to go. Okay. So taking a look at the markets here, we've been running higher. Just a quick note on this. It's always interesting, some of the core months where we might find seasonal moves popping in. I'm going to show you some of the seasonal moves right now because July can be interesting. I'm going to highlight something here too that I just started to look at the last couple of days, really, as we go to seasonality. I'm in style, folks, I'm in chart mode, and now I'm going down to seasonality here. We've got to make this comparable. In fact, let's start off with the 10-year first. But just watch this with me. By the way, 10 years was a long time ago, so the average movement of 10 years is quite low, price-wise. And so to make these comparable, you can click on the wheel up top, go to the price axis tab, and then simply just go to show as a percentage right there. Voila, you've got it. Now notice how we really started to come back into sort of a normal seasonal move over here. As we look at the cyan line, that light blue line, kind of operating like a seasonal move. We do tend to run towards the end of July. And then we flatten out in August on average. Things can change. We've talked about that before. There are some years that just go down in August and July. But generally speaking, on average, that is, you tend to get your pullback here right around September or so. Okay. So let me just quickly show you this. I'm going to flip this to a 5-year because oftentimes that shorter term time frame can even be more relevant at different times. Let's click on the 5. What do we see here? Now the 5-year is different from the 10 and the 20. Generally, over that 10-year and 20-year, we tend to top around July. But notice over here, it extends further out if we're looking at the last 5 years, right? The last 5 years is different. And that's actually maybe more relevant to the current market. Think about the kind of stocks that have been moving the market higher. A lot of technology stocks. What does this tell us about swing trading? Flag patterns, other sorts of price patterns, whatever the case might be. Well, it says that if we're looking at potential flag patterns, there may be on average a market push up higher, and maybe we could participate in that. Maybe we do see prices go up over that time frame. So that's something to consider. I just wanted to throw that out there because I want to keep you guys up to date, current on just what we're generally seeing that might be happening as of late, right? And so I kind of got in the habit of looking at the longer term time frame, but looking at the shorter term can be quite relevant. Okay. Now, what would be great is if that chart would just load up here. Is it going to load up here for us? The futures will. That's okay. We're about ready to move on. Welcome to all of you just joining us. Yes, there is an RIP Aussie out there. Did see that just before I came in. Yeah, and Gary's got it too. How's it going, Gary and others? Good to have you on board, folks. Yes, the daily news. All right. Well, I don't know. I listened to a lot of Aussie myself growing up. There you go. Let's do this. Let's take a look at the ES. Now, I want to talk just quickly, since I have it up. Look too, because we're going to tap into this in just a second, but taking a look at volume. There's volume. Oh, okay. Well, we're breaking higher according to the money flow. And remember what the money flow does? The money flow will take a look at what we're saying on a day-to-day. Do we close higher on the day, and is there more volume on that day? It just adds it, nets it out over a period of time. As you net, uh, closes higher, adding the volume, closes lower, subtracting the volume on the day, you get this money flow line. It is not an oscillator, so therefore it just makes more sense, I think, that it's not an oscillator. It's free to range, just like price action, but it is breaking higher. And all else equal, you have to say there are more buyers at the top, according to the E-mini. That's one great thing you get with volume right there. Okay, well, folks, we've got a lot to look at. So let's take a look at some of our prior trades, just see how we're doing. Trades in the past, these are additional swing trades. Remember this cat trade? We took 25 shares off the table. We're getting doggone close to this exit point that we talked about. And so I do want to put in a poll here because this is how we're doing on cat, just as a review. Even with 25 shares, it was about double. It'd be about double this if we were looking at our 50 shares. It was an expensive stock, but that here was the swing trade right there. So the question is, right, and up to these highs, and we said that's the ultimate peak of the swing trade right there, right? Let's just change some color so we can see it. That was this move. In fact, we don't need that on the screen this whole time. But this was the move coming to the upside right there, all right? We take that same range in terms of a flag pattern. We take this price range and we add this price range to the pullback, the lowest point of the pullback, which is right there. That takes us up to this level. Now, I'm going to ask you guys in the poll here a question. Let me type it up here. Do we take off cat now, or do we wait a few more points? And well, the reason why I say that, let me just highlight that too. If you get a chance to vote, I want you to kind of work through this. This poll gives us a chance to kind of walk through this sort of mentally. And just because there's going to be a lot of scenarios like this. Now, I want to tell you, this is this kind of the scenario we looked at last week. If you weren't here last week, we said that right there is the ultimate high point, right? That's the target of the full flag, and it's right around 425. But as we talked about last week, here is this range over here. That was like the prior all-time high range, right there. And we're getting up to an all-time high, which also, by the way, we had a very, very close couple of highs right next to it, right there. So do we wait for a couple more points, or do we take the trade-off? Before I go any further, keep in mind this. If we were to throw out here a simple moving average of about a 20 that tends to operate pretty closely to prices in many cases, let's just beef this guy up so we can see it. There we go, there we go. We could say we could let it ride and take the trade off here at 20, but that's been a pretty good run at the 20-day moving average, like a close below the 20. So there are a couple of different ways to do it, right? If we wanted to stick with the trade, we could let it ride, or we could get off now. What does our poll say? Okay, and that's kind of in line with what I was thinking. It's actually moving up. 82, let's go ahead and click that right now. I really appreciate it. Actually, we hit 83 right before we're done. We should get those poll results at the bottom, and there you go. Here you have it. All right. 17. Okay, there you go. All right. So some of you might be longer term traders, right? And you want to stick with that longer term trend. 17% of you to be exact. Now, I'm going to go ahead and just take it off as well because we did kind of get close. We're so close to it. Do you want to risk a few points for the possibility of a pullback lower? That's the trade-off, right? Let's just go ahead and close that trade right now, and we'll call it done. All right, so 25, we're going to close that 25. Let's just make sure. No, see, it lines up. I wanted to sell market. You got to adjust this to 25. See, the default there is 100, so minus 25. Otherwise, we're going to be in the other direction, which we don't want to do. So there it is. Let's just confirm that. So we're on, all in place, and there goes our cat trade. Okay, we've made a little bit today on that move, folks. That was a tariff type trade. I talked a little bit about tariff sort of possible tariff boosts that we might get from in the industrial area, in the materials area. I sent actually a tweet out, an X post out on that yesterday. I'll share that with you in just a second, but we got to look at some of our other trades here because there were a few things that we talked about. Remember this Netflix trade, this option trade? That trade didn't exactly work out as planned. It didn't go up. We saw 3 prior earnings beats. The company beat earnings. They beat revenue expectations as well, but prices gapped down. But remember one thing we were talking about here is on this trade, it was a short put vertical. And so I wanted to kind of make the adjustment. That was 5 points ago, but before the class, but I want to do it during class so you guys could just see what happened. It was trading about 1200 just recently, but I wanted to just show you what this trade looks like right now. So you can see that we're up 1520 on this is all, and this is up down 1745. And you say, Mike, that was a huge decline. Why are we only down that much, relatively speaking? Because the price when we sold it was last week when we put this trade on. In fact, let's go ahead and just take a look at that right here. It would have been, let's see, it would have been right back over here. And if you look at that pullback in terms of percent, where we are right there, that's 89 points lower. So when we net those two out, why is it not as bad? Well, one of the reasons is we sold when the premiums were high. Remember we talked about this? We said, we looked at this visually in terms of implied volatility and what tends to happen after earnings. It can act as somewhat of a little bit of a protective, well, you could say, in a sense, it could guard against really getting hit in the market, because remember, we lost all that value when the Vega declined, when the implied volatility dipped, and you can see it right here. So we mapped this out before. There tended to be a pretty good volatility dip after earnings, and that actually sort of in a sense pads it a little bit, or it gives it a little bit of a buffer zone, you could say, because it eats away that premium. And that helped us dramatically here. And we were anticipating that too. That was one of the sort of things we were looking at to sort of reduce the blow here, so to speak, if that were to unfold that way. Okay, and it did. And it did work against us. We don't know if it's going to hold support here. It broke lower on good earnings and good revenue beats. So I'm going to go ahead and just close this trade right now, and we'll just take a look at it, and I'll show you. So here we go. We want to net the difference out. So it's 1600 right here that we're up on this put. We're down 1795. So that difference there, basically $195, is the loss on this trade. Okay? That's the loss. So we'll create a closing order. And we did have 2 contracts in there as well, which is interesting. I'm going to just for the sake of getting this done, I'm going to close the short leg first and the long leg second. But that one did not work in our favor, but you could see how there was a little bit of that buffer zone with that big meltdown in that implied volatility, right, that we talked about previously right over here. I think it was upwards of almost like 58 or something. You guys tell me if I'm wrong. It was around 58, and now we're at 32. So just think about the reduction in the value of that, which worked for us because we were looking on the short end, right? I mean, we had a short put vertical, right? We'd sold the 1200 and bought the 1195, and the reduction of the for every 1% change in that implied volatility, it was kind of hitting the value of this range, that options, those 2 options that that we had in here for our spread trade, reducing it and kind of lowering the impact, you could say. All right, well, that's that. Let's move along. We also had this AEM. We talked about gold, and we said of all the companies out there that had kind of been showing strength recently, you guys remember we looked at gold, we looked at AEM, and we just said, yeah, AEM was really kind of like, I mean, by comparison, we looked at Barrick, which is, I mean, look at the Barrick move. It was very, very small in comparison. That's AEM. These guys are really based out of America, a lot of their mines. I think, in fact, if I'm not mistaken, all of their mines. And so they didn't have issues with pirates in other lands. When the price of gold gets high, that's one of the challenges that these miners can face. Anyways, long story short, we went through that last week. It did unfold with the price of gold, and you can see right there, there is our little trend line that got broken right there, and the prices went up. So we're doing okay on this trade. We actually had 150. So I think I actually did a 50 addition on this. You can see the average was right around that range. Let's see, so there was an additional 50 shares in there is what happened. But anyways, that was the trade that we were talking about last week. That's the breakout right there. You can see that we are close to the flag pattern. And where's that flag pattern again? That flag pattern is right here. This move up, we take this price range and we add this price range to the lowest point of the move. I'm just going to eyeball it. We did it better last week, but we said we'll take that right there at that level. Now, we additionally had a stop in place, but we wanted to add to it on the breakout. So there's a slight addition there. Bottom line is we're not there yet. I'm going to change this to 100, but this was a follow through that was, tracking gold. Let's pull up the gold futures so you can see it. But AEM, kind of like one of those that had clearly led the way historically, previously, and it's kind of doing the same thing again here. Let's take that out for a second. You can see, there you go. There is gold itself, and there's kind of the sideways range. We had a series of higher lows too. If you look at it right here, similar highs but higher lows. If I can draw this on a diagonal line, kind of an upward sloping triangle, or an ascending triangle as it's referred to. There is also this range up top here. AEM has already busted through that. Okay, we're above it on AEM. I don't think the Barrick, for example, is just barely right now. But if gold decides to run higher, it could influence these miners as well. By the way, another one that's kind of fascinating to look at, too, that can operate sort of in these areas is silver. Silver, there's a lot of industrial uses for silver, more so than gold. And we could be seeing a follow through on gold as well. By the way, there are ETFs for both gold and silver. There are also ETFs for gold and silver miners, just as a side note. We don't get into ETFs here, but I just want to state that those are out there as well. But we're looking at specific companies here for sure. So that one, steady as she goes. That is AEM, that's Agnico Eagle, and that's actually a really good run today. Now, as we look at Agnico Eagle too, in terms of some of the volume, look at how well that volume just died down here. It just died as basically prices started to consolidate. In other words, what's another way to kind of look at that? If we were looking at that lens and just saying, looking through that and just saying, well, what does that tell us? We just have maybe fewer people that are willing to sell at even higher prices. So maybe we got more buyers coming in over here. It's a higher volume scale for sure. But just even at higher prices, we just still got less people that are willing to sell here. So that's kind of another cool insight from volume. We'll see if the money flow starts to kick in here in just a second. Final one real quick that we're looking at. This one, again, we're just going to stick with it. It's BWA. This is Borg Warner. We've been in this guy for a little bit. We did take off some off the table, but as you can see, it's it hasn't moved up a ton, but it did move up a little bit. It moved up like a point, and we've still got another flag in here. The reason why I wanted to bring this one up again is because sometimes, not every time, but if you guys noticed that when prices consolidate over here, when they come back down and they touch that moving average, it's weird sometimes. That's sometimes where the price begins to bounce and move. And we're kind of approaching that right now. Now, I do want to say, can't forget that we've got earnings down here. We're kind of in the midst of earnings season, right? We've got earnings, and that can certainly influence things. By the way, the prior earnings did pretty good in terms of how the market responded. But that's also, again, like another flag pattern. So what I'm going to do over here is maybe we can add a little bit to this if, in fact, we break above this high range. Because also, going back and using this again, we have a longer-term level of resistance here. We have not yet met this longer term pole, which is like way up here in terms of a potential longer term target for the pole of the flag. But here's a shorter term flag that we could trade and take some off the table if it hits it. Notice, you see it right there, you guys? There's the flag, the pole up. There's the flag. This volume, you can hardly even see it. It's so low right here. Let's zoom in on this. I'll just show it to you. Okay, look how low that volume got in that consolidation range. Noticeably lower, right? Than over here. This really ramped up. There was some volume. Even over here is pretty good as prices went up. But over here, we have not seen anything like that. Sometimes that can indicate, that tightness of the range, not much is going on. And so when you start to break higher, it can attract a lot of attention. Let's just do this for now. I'm going to put this in just for my own sake. I'm going to go right click right there, scoot on down to create an alert, and let's set this up to an at or above. And I'll just say breakout, question mark, add to position. I want to try to play that shorter term flag inside of the bigger flag. Because many times we'll get those smaller flags just within the bigger flags. Oh, Beth says raise the stop in AM. Thank you, Beth. We're going to do that right now. Really appreciate that because we did break out above that range. We're going to move this up to the last low. Thank you, Beth. Excellent. Here I was, Beth, thinking about BorgWarner. I was one stock down the line, and yeah, you've got to do that. We've talked about that before. There are other ways to do it too, like we talked about. I raised up just below that prior low. But in addition, we've also said we could raise it below, let's say that a shorter term moving average, and it could be the 10-day. That's the 20-day right there. You could do that too. So keep that in mind. Good catch, Beth. All right. I think we're all caught up here. Looks like there was a playlist added. I'm not sure exactly what that is, but there is a playlist. Thank you, Cam. We're adding a playlist, and I think we're all set. Okay, good, you guys. All right, let's continue. But those are a few to look at right now. Let's go ahead and go forward and talk a little bit more about volume. All right, so this was an X post that I put out. Let me just pull this up right here. Sorry, you guys, we have to zoom in on it. Let me just pull this back down, and I'll show you. Why did that do that? I had it all set up just to kind of go over here. And I'm going to do this real quick, though. Okay, I'm going to maximize this. For some reason, when I pulled it up, it wanted to change some of my parameters here. That's okay. Let's just do this. Okay, back to normal. Whatever normal is. Kind of confused right now, but I wanted to show you these ones, you guys, so you could see what I'd posted in previously. This is just a video we'll send out every so often, maybe a couple times a week. Well, I send it out maybe once a week or every other week is what they have us do. But okay, so far so good. So far so good. There we go. Okay, so I pushed it down here. I am one follower away from 9,000. Who is going to be the lucky person to follow me? No, I'm just kidding. Hey, by the way, if you want to follow us on X, there's my handle right there, Mike Fairborn CS. I'm just going to throw this over here just so you have it. If you're not already following us, I do put out other sorts of swing trades on that X handle as well, so you can see them. This is one right here that we did. And I'll know, by the way, if it was one of you guys here, because we'll be at 9,000 here real quick if that's the case. Okay, just kidding. But here you go. So these are some of the flags. I'm going to do this. I'm just going to pull this up and just kind of I'm going to go full screen so you can just see some of these companies in here. I'm actually going to take a look at a couple of them today because I thought they were interesting for our class here. You can see up top. And by the way, the discussion here was how tariffs may be influencing in the industrial sector and the materials sector, and how we've seen a series of flags here, flag patterns. And those are interesting because also, there's been several $1 trillion evidently that have been set to come into the U.S., and that could help American companies. These are companies off of the S&P 500. I'm sure they do a lot of their business here. But can you see the flags, you guys? And I put on here a 20-day moving average as well. If you go to that post, I just posted in there, you can check this out. But notice over here with me, you've got a flag pattern up right there. You're kind of holding. You're kind of holding on the prior high. This one, I actually used BWA from our class because it is in that industrial material area. We were a little ahead of the curve. We talked about that like right over here around those tariffs, right? And it did follow through. Caterpillar was one of those. John Deere was one we talked about too. Here's one, PKG. Look at this, right on the prior high, coming close to that moving average, the 20. The 20. The 20. Doesn't have to bounce, but sometimes it bounces off that level. Notice how we were almost touching it right there on Ball, which is an industrial company. Well, that's going to be one of our ones that we're going to look at today because I've got to go over here. That looks so weird. It looks like I'm on the screen, and I am. I'm just go ahead and just fill that in. But take a look at Ball today. We just saw on that that X post from yesterday, it was touching the moving average. Voila, there it goes. Doesn't happen every time, but it is funny how it does happen sometimes and frequently enough. Okay, hang on. We just got a follower. I'm going to double check. And I'm going to follow you guys. I'd like to, if I knew everybody, you guys that come to my room to follow me, I would follow you guys back. Take a look at that. You guys, thank you. We did pass. There it is right there. 9,000 and change. Just going to say thanks because you just did that. There it is. 9,001. Appreciate it. All right. Thanks for getting me over the hump there. That's a big hump. 9,000 is a big number. Okay. Anyways, here's Ball. That's the move. You guys see the flag behind that moving average there? You probably see it. Look at this too. This is interesting. We get a bounce. We get a bounce. Look at this. It's just like it kind of gravitates around there. Once we took it over, right along those prior highs, and look at this. This happens so frequently. It can around these bottoms. I've seen so many of these, but that right there was above a major resistance, right? That's resistance. R for short. That's the first time we took over that moving average. We shot up higher. Look at that money flow down below. Let's tap in to the two volume indicators here that can lead price action up higher. Okay. First one we talked about, well, we'll just state this. How was the volume as we were forming the possible flag right here? Let's clear up some of this and I'll just draw this in. How was the volume over the pole, the range of the pole? Big spike, you got to love those big spikes. I want to account for that, but also look up top here. Now, how was the volume on the consolidation of the flag, folks, the flag itself? A lot lower. Now, we did talk about the bounce off that moving average, and there you go. That's kind of the setup there, Beth and everybody. Yes. All right. A beautiful breakout on Ball, right? Yeah, I mean, it is. That's a bigger move, isn't it? Absolutely, Lola. That's big. And those are the kinds of moves that traders like to see at what they perceive to be at the end of the flag. I thought that moving average was kind of cool. That's why I threw this one and the next one on at the very end for people that made it to the end of my my little tweet there, my little X post, to see those couple of stocks. But let's do that. So you saw this. So again, over here, and let's get these colors right. I do not want to associate red with positive volume. We got a blue. I don't have a green color. Otherwise, I'd be using it. And there's your red. It's a low volume, and that can be a positive as the way that some traders might perceive it. We have a plus over here. So we had more buyers possibly coming in and fewer sellers jumping out, even at higher levels there. Now, moving on to the money flow. We'll just use yellow down here. How's that money flow doing? Is it trending up higher with prices? Oh, yeah. Oh, yeah. The trend of money flow is good. Now, is it higher than price? No. I've got a couple of those to show you in a second where it does precede price action. But look at that. We're holding up. So bottom line is it was already breaking out early. We've already added a trade to this guy. So it's already up. That was the trade. Remember, I was watching this from yesterday. So this guy is up already, but we put that trade on. Okay, so we'll have in here, where would the target, where would the stop be? I'm going to choose just the shorter term flag over here, if you will, like this. And I'm going to pull these guys down for a second. There we go. So we can kind of see this. Going over to my right-hand corner of the screen, right down here, clicking on my drawing tool. I'm going to go into the Fibonacci extensions here, and I'm going to click down here. Like I said, there are several flags, but I'm going to use this one here to here, folks, and here to there. Now, where's our 100%? It's real close to 65 right there. It's real close. In fact, that's where the number. Prices are not close to 65. We're just barely breaking above our range right now. Now, when I put this on, I didn't put the stop and target on. I'm going to do that when we're done, though, and I'm going to put that stop right here, right below that point, and I'm going to put the target right here. Just on that was 100 shares. Everybody with me on that? Okay. Okay, so let's do this. That was the first one we've got. Now, let's continue on. We've already got that one under our belt here. On this, if you look at the bottom, I've got WAB as well, WAB. It too flagging, breaking above prior highs in here. You'll see it better as I take a look at a full screen on it. And let me take this guy out. Well, I'm going to keep it on to put my targets on. Here's WAB. There you go. Okay, we're touching price action and also the possibility of, take a look, resistance again. It's right around 210, and we did get above this big number over here. It's the 200-day moving average here. Okay. And so there you go. So we got above the 200 right there. Excuse me, the 200 price. Double century mark, folks. We got it right there, as you can see, and that is the possibility of a flag. Now, can you see more than one flag in there? I really want you guys to see these as they start to develop. You're probably going to see a bigger flag and a smaller flag in there. And within that bigger flag and smaller flag, there could be a couple of different trades in there. Let's put them in right now so you can see it. Here's one coming up right to there. Oh, right to there. And this is the big one, right? And you can see if I'm just eyeballing this, we're up about, let's see, yeah, 1, 2.5. Basically is just a quick way to do this. So 1, 2.5. We're right around this range as a possible longer term target. Let's change some colors so you guys can see this shorter term one. And China does see it. Rob sees it. Excellent. Right here. Probably seeing that right there. This one and this one right there. Okay. I'm going to go ahead and add in. Let's put on here. We'll do. We'll just do a round lot, 100 shares here. Actually, you know what? Let's wait. We've got earnings right around the corner, which we have to be mindful of on all these companies, right? We're going to do 50 shares, and then after earnings, if it's still going in our direction, we'll do the other 50. We're going to put a stop in below here. Remember, the stop does not guarantee an exit at the stop price. Instead, it does compete with existing orders, in the market for a sell order. But I wanted to highlight that right now. So let's just do this. We'll put in 50 shares, and we are going to put in, let's do this. I'm sorry. So let's just go buy custom with stop. We'll put a bracket order in as well. Let's just delete that whole thing. There we go. It's going to be a buy with a one cancels the other. That's OCO. I'm going to just set these up. We can leave that one as day for now. We're good there. But a couple of GTCs so that our stop levels don't drop off. We got a limit order, a limit stop and stop. You can see right here, listed as a limit. You've got our stop down below. I'm going to just set these up for now. We'll put them up. Maybe that shorter term range. We can start off with the shorter term one. We'll just see what does happen towards the end. Let's just go 215. I'm just going to adjust them on the chart for now. Okay. Let's just go 208. The higher, the lower. Let's go over here. Let's put this at a 50 tab and lock it so that we get 50s on both of the stop levels. Confirm. Let's just take a look at that right now and see what we've got. So we'll see. It's trading right at the moving average. We'll see what we get. The order filled right there. I'm going to zoom in on this guy so we can kind of adjust these. Oh, dang, it's not letting me adjust them. That's too bad. There are other ways we can adjust these, but I wanted to get, there we go. Well, there you have it. Let's just go ahead and put the stop order below this point right there, and our target in line with our original shorter term maybe flag pattern. And that really kind of does fit better our 10 to 14 day time frame. You can see up top. So there is that limit right there, right at the 100. Okay, so that would be our target, and I just use that Fibonacci tool to help us map out those levels on the upside for the possible target, which is a beautiful thing. I love the fact that we have targets with price patterns. You know, that's one thing that they can provide us. Is it a guaranteed hit? Of course not. But they have targets because sometimes, you know, that's what they will hit. And that's what traders will look for them to hit. So we've got this move here measured out. We'll just go yellow so you can just see it again from here to there. And that's an accurate map out of that price action. Okay, so when we look at that, can you see also prices ramping, volume ramping up as prices went higher here, and look at the diminishment of the volume. People may be holding that position because this guy did take out that longer term high right there around 210-ish right there. Okay, so we don't want to forget those techniques that we're looking at as well, because those can be really quite helpful. Now, let's move on, just do a couple more. We'll show you these. I might be able to put some trades on these when we're done. We're a little bit out of time, but at least I could show you the stocks that we could be looking at here. Volume, very, very similar here. Very, very light volume. Look at money flow. Money flow just broke a high over here. So this is referred to as an early warning sign. When money flow breaks higher, but prices don't, sometimes you'll see that happen just like this. Money flow at a higher level. Price is not above, price-wise, we're lower, but money flow's higher. So it's a positive divergence. We're right along that moving average. And some people might look at that. DoorDash, boy, that's been a successful product thus far, hasn't it? Now, in the healthcare area, there's quite a few that we're seeing too, money flow and volume, just getting back to that. Consolidations here, more volume on the upside for sure over here. And look at money flow, taking out prior highs. Do you guys see the flag pattern here? It's not that strong of a flag pattern short term. But if you look at this over here, look at this guy. Big move up. That's all a consolidation. That's a higher low. Will it, we're running into this longer term resistance for sure, but still, and it's got to get above the 20-day moving average. But this could be one that's also could be showing strength. What's fascinating is the healthcare center or the healthcare group is showing a few of these. Money flow, wow. Okay, sideways through here, right? Sideways price action, money flow. Look at this. Up and showing strength. So maybe some buying activity here. Does that look like a bull flag? Well, it's kind of does longer term, but shorter term, I think a little bit better. Volume could be preceding price action. That's why we're highlighting these today, because they can be leading indicators. Again, always be mindful of earnings. Bam, it's right there. Got to watch out for earnings because that can take us either direction. Now, the last couple of earnings were really quite positive. Up move, up move. I'm going to keep tabs on this. In fact, I'm going to right click, create alert, and let me know to the upside. Are we breaking out? Breakout question mark. Have that text me so that I get it generally in 3 to 5 seconds. Last one of the day, we got through them in the healthcare, and there you go. There's Lilly. Okay, this is more of an extreme example of potential money flow buy-in, or often has to do with the money flow in these big companies. It can mean institutional buying to get that much buying pressure in there. Can you guys see how these two charts are almost opposite of each other? Downward trend and some consolidation. Over here, money flow. It looks almost completely different. We're hitting new highs on money flow right now. So this is referred to by many as a smart money indicator. Is it a smart money indicator? Is that what's going on? We don't know, but we are going to put on a, we don't know if that's what's working, but somebody's liking this out here. Let's put on an alert. This alert, folks, is going to be a right click, click again. If we take out the trend line, I want to be notified for this class because we might not see the trade during our class, but I can put it on maybe during the week as a paper trade example as we do this. But look at this, create alert with the drawing again. So if it breaks that diagonal line sloping down, boom, I'm going to find out. We'll see what that looks like, okay? All right, everybody, if you found value from today's presentation, if you guys like what you're seeing, do me a favor, smash that like button. Really appreciate you guys, following us on X. Cameron May CS. Cam's got some good stuff. Mike Fairborn CS. Just make sure you're spelling those correctly, because we do have some imposters out there. Not just a handful, maybe like a few, that are out there. But folks, while you're at it too, smash that, I mentioned the like button, but also subscribe. Love to have you on board as well with us. Didn't see a survey, so I think we're all in the clear there. Great to see you all. Look forward to future discussions. We'll keep an eye on these stocks. Thank you so much too, Cam, for your help today. Really appreciate it. All right, everybody, have a fantastic rest of the day. See you next time.